All right, FBN's Nicole Petallides, market watchers Scott Martin, Joe Duran. Joseph, to you, first ending with you, is it your sense then that if this is tripped up, markets might start getting worried because they built so much into these tax cuts happening and so many deals were made attached to the budget and concessions for some senators to get those votes that this thing could unravel?
I think the markets have a lot of things to digest right now, and they're priced for almost a perfect outcome, which is the biggest concern. I think the market's looking for a reason to go down here, but there's so much positive momentum that if it does, it will probably be temporary. I think, again, this is like the boy who cried wolf. We're so tired of the whole discussion. We know eventually they'll resolve it, so I don't think this by itself is a big deal. The tax debate is much bigger. What the end resolution ends up looking like, far more important for what it means for the economy and for the stock market as well.
You know, they're doing a lot of horse trading with that, Scott, on the tax thing, and a lot of it was built on maybe to get John McCain's vote, more military spending, part of this, maybe to get Susan Collins's vote in Maine, assurances that they would bolster and support people's premiums who might be looking at higher premiums. So a lot attached to this, right?
Yeah, and Neil, that could be behind this whole budget talk, too, is maybe some of the Democrats trying to get back at, let's say, the administration a bit here by saying, hey, let's drag out this budget thing until the wee hours of a Friday night news dump that we've gotten used to. But I'll tell you what's interesting. You know, over the last few weeks, I feel like I've been kind of Debbie Downer here. I've been kind of spilling the eggnog with respect to how kind of excited or less than, rather, that I got with this work out of the tax bill because, you know, with all the machinations they're doing with the personal exemptions, the standard deductions, some of the tax brackets, it's really kind of getting less exciting for me as an individual taxpayer. Yes, the corporate side is pretty strong. So as the Democrats have kind of watered this down, they played the games with the state and local tax deductions, Neil, that really has taken a lot of the wind out of this tax bill being, I think, that big of a deal to the stock market going forward.
Yeah, it's hard to say, but, you know, Nicole, it was interesting. I think it was the brokerage firm Morgan Stanley that said, you know, for all the run-up we've had prior to today in the markets and everything that's going on, we haven't even accounted for half of it with the tax cut stuff. In other words, they go through, we're still off to the races. How wide is that sentiment?
I will say that traders think two things. And the first is, to your point, that it's fundamentals, earnings, a better economy, better labor numbers that we're seeing, homes, everything to the most part that brings consumer confidence, which boosts the ultimate stock market right to the highs that we've seen. We're not too far off the records. I know we pulled back a little bit here in the month of December, but we're still right near the records. That being said, there was a note out from one UBS floor trader today who talked about the specifics of the tax bill and those that would most affect the stock market negatively. And there were three elements. Of course, the alternative minimum tax, that has been one bone of contention from the Senate. Also, the more restrictive deductions for interest rates by businesses. And the last was the corporate tax cuts that might not kick in until 2019 rather than 2018. Those are three elements that would not bode well for the stock market. But the big picture is people still think this thing's going through, and they're still feeling pretty optimistic.
What do you think of that, Joe?
I think there are three things I'm concerned about. First, it appears that the personal tax reduction is temporary. Second, a lot of people end up actually paying higher taxes. It's an incredibly complicated outcome, and we're adding $1.5 trillion in liabilities to get it, even with the most optimistic, $1 trillion of debt. So it's really not a very clean tax bill at all. There are lots of losers along with the winners, and even on the corporate level, a lot of the big companies are not going to bring their earnings back because they're paying less than 20% in taxes today by using offshore havens, and there's no stick here to get them to bring the earnings back. So I think, again, it's more about what's already happening in the economy. I'm not sure that this accomplishes a lot other than giving a victory to getting something done. But I think when you peel the onion, there's a lot of things that just don't feel good. The private exemption for private jets, but you can't deduct your home costs. You know, there's things in there that just
Martin was okay with the private jet thing. He liked the private jet thing. But, you know, Scott, I'm reading here.
I just got mine taken away.
I'm reading here that Apple could see a $47 billion tax windfall as a result of the tax forgiveness or tax lowering rate for money that it holds abroad if it were to cash in on that. And that's just one company. Now, I know it represents a disproportionate share of the, better than $1.5 trillion. The president says close to $3 trillion held abroad. But if other companies were to bring that home for whatever reason and what other purposes, they'd make out like bandits, wouldn't they?
Yeah, and that's one of the perks. But, Neil, depending on what they do with that cash, as Joe pointed out, is anybody's guess. And I'll tell you one other thing that's kind of goofy that's going on with tech, which is why I think we've seen the weakness as the bill has been flushed out in the last week or two, which is there's some interesting production taxes that are going to be new with respect to things like Apple or, other tech companies, semiconductor companies that make stuff overseas that get a tax break with that production cost that is starting to look like it's going to go away. So companies that start to make stuff overseas to get that tax break in the tech sector may not have that benefit. So like Joe said, and I think he's absolutely correct, there are a lot of winners, a lot of losers here. But remember the word that was used back in February was phenomenal tax reform. This was going to benefit all Americans. I just don't see it that way.
What is the mood, Nicole, when you talk to traders, all these cross currents and the enormous run-up you report on so well every day? They seem to be in pretty good spirits, period.
They are in pretty good spirits. Look, it's the end of the year. We've had an unbelievable year for just about every sector. Now it is time where they start to do a little window dressing. They take the profits. They try and get into the stocks that did really well and set up for the new year ultimately. So they're feeling pretty optimistic. They're not really feeling like they've been beaten down. On the contrary, as I noted earlier, we're right near records where it's not like, and as far as the techs which have been beaten, and he makes a great point as far as how this tax bill may or may not affect them. You see a little bit of a dead cat bounce here, one analyst told me from Wedbush, but that the group will become more favorable as we go into 2018. So if you're a big believer in tech and feeling a little beaten down right now, they say to hold on there.